Hello, and depending on where you are in the world at the moment, good afternoon or good morning, good evening, and welcome to the digital asset stage at the TradeON Summit. My name is Jason Dean, and I'm here obviously at what is ostensibly a Forex event, but I hope you'll indulge me as we look at the evidence today for having a little bit of Bitcoin in your portfolio. Now, I should explain a couple of things about my own background, just to give a little bit of context. I'm an analyst for quantum economics. Our website is quantumeconomics.io, worth checking out. And this is an analytical advisory money management service for the markets broadly. Actually started by my colleague Matty Greenspan, which is a name some of you will probably recognize. Now, if you're not subscribed to his free daily newsletter, you really should be. Does a very good job of doing a daily analysis of the market, money and cryptos as well. It's a free newsletter, and I strongly recommend that you sign up. So again, if you go to that website, there's a place you can sign up there, and it's worth doing. My area of specialism sort of within that organization is macroeconomics, and really in a sort of behavioral sense, and of course Bitcoin, which is why I'm here. And when I've analysed something, I tend to like writing about it, and you can find my articles on Medium. So that's at medium.com/@JasonADean. This is my main profile, but also my regular contributor to Decrypt, CoinDesk, and Crypto AM, which are all well-known sort of crypto publications. I'm also an advisor to Luno, which is a wallet and exchange, and actually it's a great place to start if you haven't had any real experience with Bitcoin or any other cryptos as yet. And actually I'll be giving away £10 worth of Bitcoin to every attendee of this presentation, courtesy of Luno. If you want it, you don't have to have it, but I strongly recommend that you do. It is a completely free gift, and it's designed that so you can have a look at the wallet and the trading platform, maybe even do a couple of small trades between currencies to get you started in this world if you haven't done any of that before. So really it's just a way to kind of introduce you to the Bitcoin environment if you haven't done any of this before. So stick with me, I'll be giving that out at the end. If you want to though, you can download the app while I'm talking now just on your device, either Android or Google. You can go to the website, of course, which is luno.com, and then when you'll be good to go immediately when I give you the code at the end if you like. So it's luno.com or the Luno app. So just want to be clear what we're talking about today. So this presentation is really about having a little bit of Bitcoin in your portfolio, just as the title suggests, but it doesn't necessarily mean trading it. I've kind of used that angle a little bit more in the introductory sense here, just because I know that's kind of the angle you guys are more used to. And if you are Forex trading, you'll tend to have positions for quite short periods of time. Not always, but generally speaking. And although you can do the exact same thing with cryptocurrencies, it's very much an evolving market, and things are quite different in the cryptocurrency world than they are in the Forex world. So whereas the cryptocurrency market is, is growing, it's new, it's nascent, it's still finding its feet in many ways. Forex, of course, has been around for a while, and it's established and it's regulated. So there are some similarities, but there's, we're going to be looking at what those differences are, but we're going to be focusing really on why you should have Bitcoin at all. And this really means as a long play or as a hedge rather than a quick trade. There is volatility that you can play with Bitcoin, which obviously is very appealing for certain traders. But really I'm coming from the angle, let's just look at Bitcoin, look at the portfolio and see if we can work out why we should have it in there. Of course, you can trade other currencies from Bitcoin, as I say, and there are easy ways to do that within the crypto world. But if you want to get involved with that, your first step is always Bitcoin. So the point is, Bitcoin is your reserve currency, I suppose, if you like, in the crypto world, like the dollar is in the real world, if you like. So in terms of levels of understanding where this presentation will make sense, you're all here, presumably you know what you're doing, you've all got the fundamentals of trading, so I'll take that as read. But it helps if you've got a basic understanding of Bitcoin as well. You don't need to know all the technical details. There is a lot of tech in Bitcoin, but you don't need to know all of that. I'm going to give you literally sort of 30-second, 1 minute summary, just a moment of what that is, just to make sure we're on the same page. But I'm not going to go into any more detail than that. There's lots of great resources and books out there, including my own book, How to Explain Bitcoin to Your Mum, which is ideal if you're a beginner. And you can use any of those resources to really get to grips with it if you want to. And don't be shy about asking, because Bitcoin, even now it's 11 years old, 11 and a half years old, it's still very new to most people. And of course, we've all got to go through that stage where we ask all the questions that we want to know about it. So in terms of where I've been coming from, I've been trading since the pre-internet days of 1995. So this is the days of newspaper share prices, CFAX, if anyone remembers that. It was a digital service in the UK that sort of ran over the top of the analog TV signals. And I used to trade primarily equities, usually US tech, a few funds here and there, a little bit of Forex, not a lot really. Had a casual involvement with that with my colleagues. But I do like to, even though Forex has never really been my main bag, I've always liked to try new stuff. And it's probably because of that I was very open-minded to cryptocurrencies early on. Not right at the start. I missed the absolute beginning, but I did get involved pretty early on. I saw it around 2014. Spent a bit of time trying to work it out, how this thing worked. Not very successfully, it has to be said, in those days. And in some ways, the trading I'd done was a bit of a disadvantage, because I was so used to some sort of trading platform, a centralized, regularized trading platform. And of course, Bitcoin is different. And certainly at that time, it was all a bit Wild West, and there was quite a high chance of getting scammed, and everyone was still learning, so didn't really quite know how this thing was going to work out. So I didn't really get proper skin in the game until early 2017, so quite a long time afterwards. But then, of course, I went completely the other way and got fully involved, sold my businesses, and I've been working full-time in the industry ever since. Really doing anything around it. So that's masternoding, that's mining, that's writing about it, it's presenting, anything really around that industry, and that's kind of what I do now full-time. Of course, we are talking about cryptocurrencies, and if you're a Forex trader, you've probably picked up immediately that word currency, if I sort of pulled it out of that word. And there are, of course, many different currencies in the cryptocurrency world. So, in a roundabout sort of way, I've now become quite an active trader, because I'm trading through these different currencies, but not in the traditional sense. And that is a possibility as well. But as I say, the root to all of these is Bitcoin. It's the daddy of them all. So we've got to start there, and we've got to make sure that we've got our understanding absolutely bang on with what this is, or certainly enough anyway that we can go through this presentation. So I'm just going to do now this really quick summary of what Bitcoin is, just the basics here, no more than that. So Bitcoin was designed as a currency. Actually, the white paper specifies specifically that it was a currency, and it was created by this mysterious character called Satoshi Nakamoto, which is a name you may have heard. Now, we don't know who he was or she was, or whether it was a group. We have absolutely no idea. They set it up, they got a community going, they designed a thing, got a team of people working on it, made it a real community project, and then disappeared. Never to be heard of again. So we don't know anything about them, but in a weird sort of way, it was the best thing they could have done for Bitcoin, because there's now no way that Bitcoin can be linked to any person. So it's very much a community project and ideal, and it has been ever since. So it's a currency is the key point from this. So when you think of the currencies that you deal with, say dollars, euros, pounds, whatever it is, just for the moment, add Bitcoin onto that list. Okay, so it's just another currency that you can move between. But there are a lot of differences. See, Bitcoin is not owned or issued by any country, person, or company. Is completely open source. It's sovereign in its own right, if you like. It's also entirely digital. There's no physical form of it. And that's a kind of weird thing to say in some ways, but if you think about it, the work that we do, when we get paid, you get, the money appears in your bank account, but it appears just as digital numbers on the screen, and we use those digital numbers to pay bills and so on. We already use digital money all the time. The trades that you do are all digital, of course. So we kind of use that idea. Just the difference is with Bitcoin, you can't go to a cash point and turn it into cash. We know we can do that, but we rarely do, of course. So it's also a trustless peer-to-peer system. Now that makes it borderless, and it makes it incredibly versatile. So in other words, you and I, wherever you are in the world, we could trade directly, we could send money to each other as easily as sending an email to each other. Now it's not quite like that, but it's very, very close, and it's quite a good analogy. So we can do it without involving any third party, which if you think about it, you can't do in any other format at all, whether you're using a trading platform, using a bank or whatever. So it's completely peer-to-peer, and it can't be reversed, intercepted, or otherwise corrupted by anyone else. Not like a bank transaction, which of course can be. So because it's backed by maths and cryptography, hence that term cryptocurrency from the word cryptography, you know the Bitcoin you're receiving is genuine and it can't be counterfeit. So, and you also know that categorically when you send it, it will be received because it's mathematically guaranteed to do so. And again, I don't want to get into the real sort of tech of how that works, but there's plenty of information out there. So you can see this is quite different from normal money. But there is one more huge difference between normal fiat and Bitcoin that is absolutely and utterly revolutionary in the context of what we're talking about. It is the fact that Bitcoin has a limited supply. It is fixed for all time and forever at 21 million coins. That's it. And that's not trillion, that's not billion, that's million, 21 million coins. Now, if you think about it, that's not even enough for every millionaire on the planet to own one. So it's very, very scarce. But just think about that for a minute, because we're all used to dealing with fiat currencies, right? So if you have $1 in your hand, that $1 has trillions of brothers and sisters, and right now it's rapidly getting more brothers and sisters. So we know it's one of 24 trillion, 25 trillion, 26 trillion. We don't know where those numbers are going to win, but you have one of an ever increasing pot of dollars. If you have one Bitcoin, you have one Bitcoin of 21 million. That will never change. So, and if you think about it, this is very unique in the world of money. Even other assets, like if you had equities, there are companies can dilute your position by issuing rights issues, that kind of stuff. So it is quite a different concept to get your head around. Now, to be clear, new Bitcoin is being minted every day. The current rate is about 900 a day. And the reason for that is that all 21 million weren't available on day one back in 2009. So they are released over time according to the mathematical algorithm that governs it. And at the moment, in fact, about 18.5 million have been minted, and the rest will take, get this, another 120 years to be fully realized, because, and I am simplifying this a little bit, fewer and fewer are released over time. So the effect is exponential. Bottom line is, the last Bitcoin ever to be produced will take years, whereas at the moment, as I say, it's being produced at the rate of 900 a day. Now, in actual fact, there's going to be less than this because we already know we've lost several million. So it might be only about 17 million which are ultimately available. And the reason for this is loads of them were lost in the early days because they didn't have any value. So in fact, you used to go to websites and they used to call them faucets, and they would give them out. So say, oh, have a Bitcoin, have 5 Bitcoins. And if you lost a few thousand of them, well, it was 10 cents. I mean, why would you worry about it? But once they're locked into the blockchain and you've disposed of all your security access to it, your C key, your private key, or whatever, once you've got rid of that, you can't recover it. So it's gone forever. Of course, it doesn't happen so much now because it's quite a lot of value, and people tend to look after things when they have value. So the balance of where we are now in kind of Bitcoin's life cycle. So where we are, so the price is obviously higher now than it was 10 years ago, but so is the security. So are the range of associated projects, such as products, I should say, such as wallets and exchanges. The network security of Bitcoin itself is completely unparalleled. And you know, there's a much higher chance of Bitcoin success now than there was 10 years ago, arguably, even though we can still say there's still not regulatory clarity in a lot of countries. But it does mean, in my view, that we are in a golden era right now for buying Bitcoin. Now, it may not seem like this, because it always feels like the best time to buy Bitcoin was 5 years ago, and you might say, fine, that's true, but the second best time is now, right? So, but we are, because the combination is just right. So, as I always say, if you think getting hold of a whole Bitcoin right now is tricky, wait until your kids have a go. And of course, you don't need a whole one, because in the same way that we have sort of pounds and pence and dollars and cents, we have Bitcoin and Satoshi, named after, of course, its mysterious creator. So you can buy hang on, I've got to do the figures. 0.0000001 Bitcoin is one Satoshi, 7 zeros, and then a 1 is 1 Satoshi. So, and to be honest, that's what most of us will be dealing with in the future, because the reality is, when you're looking at a disinflationary supply curve, like Bitcoin's is, quite similar to gold in that respect, unless you were very early in the game, like before or even now, or you're very, very wealthy, you won't be holding a whole Bitcoin. You'll just be dealing with Satoshis, like most of us. Now, I understand that that is an absolutely bold statement, because the reality is, if that was completely true, then you wouldn't need to attend any more of this presentation today. You just switch off now, go and buy your Bitcoin, and just say, well, you know, Jason said it would all be fine, so I'll just buy it and wait. But of course, it's never as simple as that. Of course, this is, you know, we've always got the same provisos, haven't we? It's like, this is not financial advice, do your own research, etc., etc. But it should be clear that this sort of preamble I've done about Bitcoin has revealed sort of two key points already, kind of two key reasons why you should have this in portfolio. And the first one, of course, is timing. Now, we all know that time in the market is more important than timing in the market. But of course, it could be great if we could get both, right? So we are, in my view, coming to the end of the time when it's affordable for you and me to get a whole Bitcoin, or at least a good chunk of one. And the second point, to kind of summarize again what the limited supply point I mentioned earlier, is the fact that this supply is ultimately going to be so limited. Right now, Bitcoin is still relatively easy to get. Even though people like Grayscale, you probably heard, are hoovering it up right now at an astonishing rate for their ever-increasing institutional buyers, it's still fairly easy from any exchange to do it. Now, that may not always be the case. The supply of Bitcoin, say, is very, very limited, and demand is increasing naturally. So there will be a price consideration. So right now, to put into context for you, there's less than 0.5% of the world's population is using it. And it's growing at the rate of around 200,000 people a week. Now, I wrote an article on this recently, which is worth checking out if you go to my Medium profile, which gives some more information about that in more detail. And it's fascinating. But the point is, it's tiny. So imagine what's going to happen if we get to 1% or even 2%. Already you're dealing with very large numbers in terms of price. So timing right now is probably pretty good. Again, this is conjecture. It's based on research I've done. It's based on my sort of analytical approach to this. And I'm looking purely at the numbers. So this comes with all those normal provisos, but that's what the numbers tell us. So you've got two reasons already why holding Bitcoin is very different from holding anything else. Now, it just means really that the markets are naturally geared in your favor to those who hold Bitcoin now. But if you're worried about holding Bitcoin directly, you may have heard, you know, how do you store it? I've heard of hard wallets, cold. I don't know what any of this means. Remember that Bitcoin already has a number of products around. There's already a bit of an industry around it. So there are funds, there are ETFs, there are options, there are all kinds of different routes that you can use, which are based on the Bitcoin price and not the underlying asset itself. But of course, I'm always one that says it's great to have the underlying asset. It's always nice, if you like, to have the gold rather than the piece of paper that says you've got the gold. Kind of an extra peace of mind, I guess. Now, there are other things about this, because obviously there are a lot of people say, well, Bitcoin is a statement against the current banking system. It's a way to solve the problem of the 2 billion that are unbanked in the world right now. It's a way of protesting. It's a way of sticking two fingers up at the current system. And that's all true to some extent. And certainly when it first started, you definitely felt there was an element of this in the white paper and the writings that were going on around it. But as traders, investors, we're probably less interested in the kind of slightly fluffier, almost hippie-esque arguments for holding Bitcoin. We're probably more interested in what we're going to get back, what our return's going to be. Now, again, it's dangerous territory and quite clearly not financial advice, but I'm just kind of talking about this in a general sense and want to make sort of one key point on this, and that can really be summed up in just one word, and that word is optionality, which I'm sure as traders are all familiar with it. But really what I'm saying is the potential upside in owning Bitcoin is far more appealing than the potential downside. So let's have a look at an example. So let's say we're going to invest, say, $1,000, or we're going to, remember, we're just really talking about moving currencies around. So we're going to take $1,000 of our fiat currency, we're going to move that into the Bitcoin currency, or pounds or euros, whatever it is. So really $1,000 is probably more sort of individual portfolio here. Might be someone like me who uses different platforms for different trading. So I might buy equities on using CFDs on eToro. I might use Luno to trade between currencies. I might hold coins in Exodus wallets or blockchain wallets. But broadly, I manage my own portfolio. And $1,000 is not an insignificant amount of money, but it's not a huge amount of money. And of course, I understand we're all in different places on our individual financial journey. So how you feel about that amount of money will reflect where you are. But the point is, anyway, let's just take that number and look at the possibilities that we have. So if you go right back to the start of Bitcoin's life and put that $1,000 in, then you'd be sitting on billions now. In fact, many, many billions now. In fact, a single dollar would have given you many millions. So the returns so far on Bitcoin, of course, have been enormous. And of course, it's very easy to think, well, those returns have happened. But for the reason we've already looked at, the chances are that we've just completed the very first stage. Bitcoin is proving itself. You may not have put that $1,000 in at that stage because it was so risky and quite tricky to hold it. You might have sold it when it doubled just to get out of that risk. But if you held it, you would have had a great return. But it's not really a realistic comparison. But going forward, where the price goes now is anyone's guess. I've given my kind of mathematical model on where that can go, and I'm sure you're aware, as I am, of the huge number of price predictions that are out there, from zero, given by Warren Buffett, of course, to 50,000, to 500,000, to 1 million, even more. There's a particularly famous model called the stock to flow ratio model, which has been floated by an anonymous trader called Plan B, which has gathered a lot of support, kind of makes sense on a technical, analytical level. And that sort of looks at 288,000 in the next year or so as the next likely point. But, you pays your money, you takes your choice. No one can guarantee any of these numbers, and there's a lot of things that can happen in the meantime, particularly with what's going on in the world right now. But in my view, and again, this is just my view, it's going to go one of two ways. It'll either go to zero, in which case you've lost your $1,000 forever, or it will go the other way and go crazy. Probably in a crazy cycle that we saw like at the end of 2017, 2018, when it peaked at 20,000. It's not likely to, in my view, to stay in the same trading range for very long periods of time, because there's simply too much happening, with all the supply and demand pressures naturally. So, forgetting everything else. And there's a lot that still needs to happen with Bitcoin. So 10x, 20x, 100x, it's all possible. For $1,000 return, it could be zero, or it could be many, many, many tens of thousands of dollars. So the point is, as long as you're prepared to write that money off in the worst case scenario, the risk versus return on this is pretty enormous. Possibly the equivalent to buying Amazon stock for pennies when no one knew it was going to work or not. So that gives you some context of this. Now, obviously, with a fund, apart from the fact this might be harder to do because there's extra responsibilities and extra sort of constraints from a regulation point of view, you'd be looking at bigger numbers. But, you know, a 1% allocation in these cases, in my view, is entirely justifiable, depending on appetite for risk and, of course, all the other factors you've got to take into account. So a 10 million fund, you might go to $100,000. Which is, you know, be 1%. If Bitcoin fails, you lose that 1% of the fund value over the 2 to 5 years, which most portfolios can probably bear. But if Bitcoin works, then that 100,000 could well be worth much more than the fund was originally. So these are all just concepts and numbers I'm throwing at you to give you examples, but of course you must assess your own risk and assess what's going on. What I'm saying is Bitcoin itself has optionality. There's also a kind of defensive angle to this as well. So, and the first part of this really is hedging your bets. Now, particularly against fiat. Now, again, we can apply this on an individual basis or a fund management basis, but the whole thing is very relevant right now because we're in this period of massive quantitative easing. It's absolutely unprecedented, and the rule books are out of the window right now. We're basically making it up. I'm not saying we, as in I'm involved in it, but you know, we as a species are basically making it up right now, and we're really going for it. And it's hard to argue really whether governments could have done anything else at this stage, but we do know for sure there's going to be fallout. So if you remember at the end of March when all of this started happening, there was that huge sell-off, wasn't there? A big rush to fiat. Everything was dumped. So it was stocks, funds, gold, Bitcoin as well. It was all converted back into fiat currency because no one knew what was going on. So we just get into fiat. But we all know also we can't stay in fiat very long because we know it's devaluing all the time. And we know that devaluation is likely to increase in the next couple of years in particular. So we need to get out of fiat and we need to find another route to go. So where do we go? So obviously, you know, equities are all over the place. And frankly, they've been in la-la land, in my view, since March, where we've got all these massive valuations on these future earnings, which I think are going to take a while to materialize, frankly. Forex is going to be fascinating, that's for sure, as all these currencies are changing so quickly. But bonds are safe, we think, but we're in, again, uncharted territory, so who knows. But of course, traditionally, we'd go straight to gold. And of course, we are seeing that now, and that's no real surprise. And if that's, if you're an institution, you'll probably have existing pathways to do that fairly easily. If you're an individual, though, maybe not so much, because buying gold as an individual actually isn't that easy. So buying Bitcoin, though, is. So it's easy to get. There's no storage fees. It's you know, here's the most important part, though. You're out of the existing financial system. So whatever you think of it, that system that we know and love or hate, depending on your point of view, that system that system is now uncertain. So we have no idea how it's all going to play out in terms of stocks, funds, fiat. We just don't know. So my view is you look at Bitcoin as a defensive hedge against the entire system. As long as you have an easy way out between those two worlds, so our traditional kind of financial system and our kind of new cryptocurrency financial system, and they can coexist, these two. I know there's a lot of Bitcoin fans and cryptocurrency fans who say, oh, it can replace everything. You know, I don't want to get involved with that. They can coexist, and at the moment, I think they should coexist. So this is something, of course, that we've never been able to do before, ever. In history, we've always had to stay within the existing system. For the first time, we can move between an alternative system and our existing financial system, and it feels wrong to me not to take advantage of that in terms of hedging your bets. And of course, you could also call it really diversification. So, you know, not just across sectors, not just across financial products, but through the whole system itself. And that is worth a thought, thinking about that. And there's one more factor that I talk about quite often in my articles, and that's to do with accessibility. It's kind of linked to where we were. And this covers sort of two areas simultaneously. It's the last part of this. And it's part part of it is a reason why we would see an increase in use of Bitcoin broadly, especially with what's going on at the moment. And the second part is also a reason directly why you should have Bitcoin in your portfolio. And that is, just to revisit this section, the ease of buying and storing it. So at this point, really, I'm talking to individual investors rather than institutional investors, and with good reason. So think about it from this point of view for a second. So usually when there's an IPO or a new fund comes to market or something like that, it's the institutions, generally speaking, who get first dibs. Okay, so usually retail investors, MAR and PAR investors get the leftovers or have different rules about applying. Traditionally that's always the way it's been. But Bitcoin is very different. It kind of turns this on its head. So to use that slightly cheesy expression, it is cheesy, but it does work. Bitcoin is very much a currency for the people, by the people. And it's the people, not the institutions at the moment, who are certainly driving a big part of the transactions that are happening. And a lot of the action generally around Bitcoin is mostly in individuals. So as we've already mentioned, in uncertain times, institutions will go for gold, of course, and individuals, if they knew how to do it, would probably go for gold. But we also know that only a certain percentage of people ever do that, because it's you've got to know what you're doing. You've got to know where to go. You've got to know what you're looking for. You've got to avoid counterfeit. You've got to know how to store it. It's liquid, but not that liquid. There's a process to go through, and blah, 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 blah. So it's always been slightly tricky, and it's tricky enough that it can put some people off. But until now, that's always been the case, because now, of course, we have Bitcoin, and in the uncertainty that lies ahead, there will be a good percentage of Bitcoin who buy. There will be a good percentage of people who buy Bitcoin instead of gold, and we do have some precedents on this already, because we have seen Bitcoin volume increases in Venezuela, in Argentina, in Zimbabwe, places where there's economic pressures or uncertainties. And really this is from the man in the street who has this option finally of getting out of the system. Now they may not see it that way, but they'll see it as a way of protecting their wealth. And of course it's well known that even the people who bought Bitcoin at its peak in Venezuela, and of course Bitcoin prices come down since then, are actually better off than if they'd left their money in their natural currency at that stage. Now, if you're Forex traders, you probably know all this already, but that's an astonishing thought. And that was buying Bitcoin at its peak. So there is an element of store of value here as well. So if you haven't got any Bitcoin in your portfolio right now, I'm hoping these key points at least give you food for thought. So even if you don't run out and go and get it immediately, hopefully that's sown the seed for you. And of course, we have to remember this is just a really quick overview of why I feel it's not only a good idea at the moment, it's probably absolutely essential going forward, but in my view anyway. But in any case, whether you actually commit any funds to it now or not, I'm going to give away £10 of Bitcoin here and now to anyone who wants it, courtesy of Luno Wallet and Exchange. So to claim this, you need to have installed the app on your Apple or Android device, or you can just go on a PC to luno.com. But it's actually easier through a device because of the verification process. Much easier to do it on a phone, and you must be over 18 to set up a wallet. And it's about as hard to do this as setting up an email account. Basically, it's probably actually slightly easier. And finally, to claim this, you must be living in UK or Europe. This offer is not available outside Europe at the moment, and it's just a limitation of the jurisdiction of where I am now, because I'm based in the UK, where I'm talking to you from now. So once you've installed it, I recommend you do the verification first, and you do that by going to settings and verification. Just follow the process there. It's the usual passport and smile at the camera bit that we're all used to these days. With Luno, they use facial recognition software, so quite often it's done instantly. Sometimes it goes off and it needs to be looked at manually, but just bear with, the process is pretty quick. And then once you've done that, there's a section that says rewards. and you go to that, and then there's the section which says enter a code, and at that point where it says enter the code, this is the magic password that you need. It is on the screen now, and it is PDUK TRADEON, so it's PDUK TradeON. And that code is good and live now, and it will credit £10 of Bitcoin immediately to your account. So completely free of charge. There's no other provisos or anything like that. You can literally do with it what you like. If you're in Europe, it will give you £10 worth. So obviously, it will, it's slightly more euros. So it won't be, it's about 11 euros, whatever the conversion rate is at the moment of Bitcoin. And that's it. You'll have it immediately. You can use it. You can play with it. You can send it to each other. You can maybe do a small exchange on the built-in exchange app built into the software itself. You can test going backwards and forwards between fiat and crypto, because don't forget, Luno effectively acts as a gateway between that, the financial system we're used to and this kind of new developing financial system. So it's a nice, easy gateway to go backwards and forwards between the two. And you can add more fiat to it if you want to, the debit card or bank account. And basically just, if nothing else, it's pretty cool to say you got some Bitcoin. So I have to stop here as I'm about to go over time, and then I'll get in trouble. But by all means, get in touch with me if you need to, if you have any questions. I'm just putting some details on the screen now. So by all means, I'm always on Twitter, so you can follow me there, and you can DM me there as well. That's probably the best chance of getting hold of me quickly. I'm on LinkedIn, so look me up if you want to get in touch with me that way. And if you want to keep up to date with the analysis work that I'm doing, I would go to medium.com/@JasonAdean. I'd also strongly recommend that you sign up for Quantum Economics newsletter, which is sent out daily by Matty Greenspan. It's a great newsletter, and it really does give a very nice summary of what's going on in one simple little email. So I think that's it from me. I'm going to have to go now. I think you can ask questions here directly, or there is a comment section. I'll be honest, I'm not quite sure how that bit works at the moment, but if you can't get hold of me today through this route, those are the other ways to do it. But it's been an absolute pleasure being here talking to you today. I hope you found it useful, and of course I hope you enjoy the rest of the TradeON Summit, and I'll probably see you in the virtual foyer somewhere. Okay, thank you and goodbye.